trillion industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do. Bloomberg surveillance. Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks right now. We do see the S&P 500 up only 0.1%, but 69.74 the level here. NASDAQ up 0.2. If you take a look at oil, it continues to, well, it's only down 0.05 on Brent. But 94.72 is the level there. WTI also bouncing back and forth. We'll find it. We'll show you. NVIDIA right now up 1% almost. That's helpful. Broadcom gaining 3.7% on its deal with Facebook. Snap doing well. Also, Allbirds. This is an astounding story. Well, it was.
Oh, no. It still is behind you if you look on the other side.
I'm happy about this, though. Okay. Who knows what's going on? Ted Pick is joining us at 10:40. The CEO of Morgan Stanley is coming on this network at 10:40. So mark your calendars. We don't want to waste your time.
Yes, 10:40. Okay, I see you have Stellantis there, Matt. Should we talk about Stellantis?
Yes, Stellantis shipments are rebounding, up 12% globally in the first quarter, led by a 17% jump in North American sales. Joining us now is Bloomberg Autos reporter Gabby Coppola. And Gabby, I want to say this is because of the Hemi, right? It's because they brought the V8s back that they're selling more vehicles.
Matt, I'm so happy to tell you that I think you're right. I think that is part of what's driving this. That was a kind of strategic blunder that they ever took it away in terms of, you know, pleasing the customer. And the fact that Ram has basically, they had some manufacturing problems, some issues. They got those worked out. So they're coming off a low base, but yes, and they've brought back the Hemi, put it in the Ram 1500, and that is what consumers wanted. And if you just look at the Ram light-duty pickup truck deliveries in the U.S. in the first quarter, they were up 27%. So that helped a lot. Also, they have the new Jeep Cherokee hybrid that just started delivery. So they're finally getting that new product out the door, and that's helping them, you know, recover shipments a bit.
Is it enough? I mean, they only just earlier this year, Gabby, took a $26 billion write-down in charges. I mean, that's pretty massive to deal with.
Yes, it is. And, you know, they certainly weren't alone with that. A lot of automakers, a lot of that was, you know, they ordered all this tooling and equipment and parts to make electric vehicles, and then they scrapped the plan. So they had to pay the suppliers for that. So is it enough to be profitable? I think CEO Antonio Filosa has said that North America business will be profitable this year. That's what they're hoping for. The rest of the entire company, TBD. And And I think they're looking for solutions for other regions, but they've really, put most of their eggs in the basket of a rebound in North America, and particularly the U.S.
They were one of the first companies, Jeep was one of the first companies to pull its factories out of China as, things got a little bit heated. And now I read that they're thinking about going back to a partnership with Dongfeng to make vehicles there, to make vehicles for China, to make vehicles for Europe. What's the story with that?
It's very interesting. So you're right. Back under the previous CEO, Carlos Tavares, I think to his credit, he sensed that there was going to be sort of just the China car market was going to be a bloodbath in terms of profits. And so he got out of there and they broke up with Dongfeng. But now, they want to get back. And the bigger issue is that Stellantis has a lot of excess capacity in Europe. And even though they had some rebounds, in shipments, like with the new hybrid Fiat 500 made in Italy and things like that, Maserati, Alfa, they need new markets and they need someone to, help absorb some of that capacity. So the talks that my colleagues in Europe reported today is that they are talking about getting back together with their Chinese partner Dongfeng, where Dongfeng could possibly maybe use some of the production or build and use up some of the capacity in the European plants, and in return they could make some of Stellantis's models in China and help them access the Chinese market again.
All right. Hot story, Gabby. Really appreciate you joining us. Gabby Coppola there talking to us about Stellantis. I will say, if you listen to my podcast, Hot Pursuit with Hannah Elliott, you'll know that I love the V8s like every other American. I own a 392 Hemi in my Challenger. But I will say the Hurricane Inline 6, the high output motor with 510 horsepower, is still a fantastic motor, even for the truck. I drove it in the Ram 1500.
I'll take your word for it.
Yeah. All right, coming up in the next hour, Goldman Sachs' Catherine Bordelmay joins us, plus Bank of England policymaker Megan Green, and an exclusive interview with Morgan Stanley CEO Ted Pick at 10:40. This is Open Interest.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Middle Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Home for original reporting.
I'm Deborah Rodriguez. The Pentagon says the U.S. is sending thousands more troops to the Middle East, despite a new assessment from the president on how long the war will last. He told Fox Business this morning he thinks it's close to over.
I think we're doing very well, but it only matters what the end result is, and maybe it'll happen fairly soon. Who knows?
Iran's military is threatening to block the Red Sea if the U.S. doesn't end its blockade of the Strait of Hormuz. CBS's Elizabeth Palmer reports from Tel Aviv.
CENTCOM reported yesterday that in the first 24 hours of the blockade, 6 merchant vessels obeyed warnings from U.S. warships to turn around and return to port. 2 of them, says CENTCOM, had visited an oil loading facility on the Iranian coast, but not in that little narrow pinch point of the actual straits.
Gas prices in the U.S. are at an average of $4.11 a gallon today. Californians paying about $5.88. Chevron executive Andy Walsh suggestion to CBS News.
Look, people should try to drive less. They should try to conserve energy. We should be doing that all the time.
President Trump told Fox Business today he will fire Fed Chair Jerome Powell if he doesn't resign when his term ends next month. They've been at odds over interest rates. Powell has the option to remain as a voting member on the Fed's board until 2028. More dangerous weather has hit the Midwest.
Severe storms, including confirmed tornadoes, caused widespread damage across eastern Iowa, Wisconsin, and northern Illinois. David Magno lives in hard-hit Sussex, Wisconsin.
Someone called me. I go upstairs, and you can see every tree is down in the backyard. One hit the neighbor's house. I got one of the garages right into the roof. Yeah, it was wicked.
Heavy rain has caused flooding issues across parts of Wisconsin, Illinois, and much of Michigan. More severe weather is possible today from North Texas, north and east to Pennsylvania. Jim Crisula, CBS News.
Honda is recalling 440,000 minivans. WWJ's Jeff Gilbert has details from Detroit.
25 people have been injured after the airbags in these 2018 through 22 Honda Odysseys deployed suddenly, not from crashes, but from things like striking potholes or speed bumps. The issue traced to an airbag module. Dealers will either reprogram or totally replace that module.
It's April 15th, and if you haven't filed your taxes yet, don't blame your accountant. William Bennett's a CPA in Warner Robins, Georgia.
They come in a couple days before the deadline, and they expect us to create a miracle and get their taxes done in a short amount of time.
The Dow is down 105 points in early trading. This is CBS News. World Cup fans may have to pay a small fortune just to get to the matches in New Jersey.
The Athletic reports New Jersey Transit may charge more than $100 for round-trip train tickets from New York Penn Station to MetLife for the 8 matches there. That trip usually costs just under $13.
I think it's a little crazy.
NJT says the prices have not been finalized. New Jersey Governor Mikey Sherrill says it'll cost $48 million to provide that NJT service.
We were not going to be paying for moving people who are viewing the World Cup on the backs of New Jersey taxpayers and New Jersey commuters.
Michael Wallace, CBS News, New York.
Social media looks Maxer Claviculars just shared an update after he was hospitalized in Miami for a suspected drug overdose.
You want an Audi?
20-year-old Braden Peter says he's home now. He says substances are, in his words, just a cope, trying to feel neurotypical while being in public. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well as streaming live on Bloomberg.com as well. It is Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Program. We got red and green out there on the tape here. We'll get to that today. Jennifer Welch, Chief Geoeconomics Analyst at Bloomberg Economics, will join us on the latest out of Iran and what the economic impacts might be going forward. Cheryl Pate, Senior Portfolio Manager at Angel Oak Capital Advisor, get her thoughts on these markets. Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence, talk about all things tech. I'm waiting for some of these IPOs of these big AI companies like Anthropic and all that
Remember
kind of stuff.
when unicorns were $1 billion?
Yes.
And what happens when a startup is like $800 billion
yes,
or
I
a
know.
trillion?
Exactly. So we'll talk to them about that because I think we're going to get a lot of those deals this year. So we got a lot of stuff coming up. And around 10:40-ish, Ted Pick, Morgan Stanley CEO, is going to speak with Bloomberg Television anchor Lisa Abramowitz. That it will be interesting. So we'll bring that to you when that happens. We got a lot coming up over the next couple of hours. Let's kick it off with Alexis Christophers and a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. We have got a mixed market at the moment with the S&P 500 up 10 points, but the Dow Jones Industrial Average is giving back about 150. NASDAQ Composite, though, extending its longest winning streak since 2021. The NASDAQ now up about 120 points. Brent crude is lower after spending most of the morning higher, down now about 1/3% at $94.50 a barrel. West Texas Intermediate also reversing an earlier advance, now down about 1/3% at $91 the barrel. As for the Bloomberg Dollar Spot Index, little changed at 1193.46. We've got yields higher, the 2-year 3.76%, 10-year at 4.27%. Got some stock news we want to get to. Shares of Bank of America up now more than 1%. Morgan Stanley rallying 4.5%. Each of those big Wall Street banks posting blowout quarterly earnings on the backs of record stock trading revenue. We've also got shares of Snap, the parent company of the social media company Snapchat, up 6%. It's going to lay off about 1,000 workers or 16% of its workforce to reduce costs. And shares of GitLab rallying more than 4%. The maker of software development tools says it's expanding its collaboration with Alphabet's Google Cloud. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate it. We have Scarlett Fu here, Paul Sweeney. We're at Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Market Drivers today is brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. Red and green on the screen as Alexis was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at today?
All right, Paul, let's take a look at the green stock this morning. That is Bank of America, ticker BAC. We did, of course, get results from that bank, part of a week of big earnings for Wall Street banks that typically kicks off the earnings season. So Bank of America, again, reporting its highest quarterly revenue in more than a decade. That seems to be a theme for Wall Street banks reporting this week, particularly for the equity trading side of things. That climbed 30% in terms of revenue to $2.8 billion in the first quarter. Fixed income trading rose less than 1% to $3.5 billion, so a little bit more disappointment there. But overall, good numbers in terms of trading revenue for Bank of America. Deal making also making a comeback there. Their investment banking revenue of $1.89 billion beat analysts' estimates. And of course, no worries about private credit. Bank of America did disclose about $20 billion of private credit exposure, but they did say that the underlying collateral of those loans are showing, quote, strong earnings, and they're often in the senior credit stack. So all good. It's all fine, guys.
It's all fine. All right, so we're done with the big banks. Let's move on to something in the tech sector.
Absolutely, Scarlett. Let's take a look at Broadcom today. That is also in the green, ticker AVGO. Those shares are up more than 3.8% now at the moment, so extending those opening gains. And so we're getting a little bit more detail of its partnership with Meta. We know that they are, of course, in a deal to make custom chips for Meta to deploy its AI infrastructure. So now we know that the partnership also includes a commitment to develop chips that will deploy more than a gigawatt of computing capacity. So for context, more than a gigawatt is equivalent to electricity that can power 750,000 U.S. households at any given time. So that's a lot. And the arrangement is also expected to be the first part of a sustained rollout that will be worth billions of dollars. Part of the deal is also Broadcom CEO Hock Tan will be transitioning off Meta's board into an advisor role.
Okay. All right. Well, back in the day when I did wear ties to work, I wore Hermes ties.
Hermes ties.
What's going on with those guys?
Well, not good, Paul. Their shares in Europe fell by a good bit, and we're seeing those declines reading across the ADR. So the ADR ticker is HESAY, and they are down nearly 8% at the moment. And, you know, in Europe earlier, the shares fell as much as 14%. That is the biggest on record. Disappointing earnings across the board. Missed estimates. They were dragged down by weak performance in Asia Pacific and France. And analysts already had low expectations because they were underperforming the broader luxury sector. So imagine undershooting even extra low expectations. And really the issue, it seems, is that they have a managed scarcity-driven model, right? So they make their products purposely scarce. If you've ever tried to buy a Birkin bag for somebody that you know or love, you probably know that it's nearly impossible, unless you're Kim Kardashian or something. But it seems like that strategy, it has carried it before in previous crises. It doesn't seem to be working now.
It works until it doesn't work.
Yep.
I don't know. Have you ever even tried to look into a Hermes bag? A Birkin bag?
No, not at all. I mean, the ties, they were a premium price product for me, but I liked them, and so. But I just downsized from like 8 bedrooms to 2, so I had to get rid of a lot of stuff, including my ties. So I
don't think I've seen you wear a tie in years.
No.
All right,
so I gave it away.
Christine Aquino, thank you so much. Christine Aquino is our Bloomberg managing editor for Markets Live. And for more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, we are looking at a market that is tentatively in the green. If you look at the S&P 500 and the NASDAQ, oil prices are also, for a change, doing nothing.
Yes, they're kind of steady. They were a little bit higher this morning, which kind of surprised me. They're flat right now. But we did have, I guess, the latest social media post from our president suggests that maybe the talks are still potentially on the table in the very short term, and maybe something can still get done from a negotiating standpoint.
And that's all we have to really work with. That's what investors are dealing with right now. So let's bring in Jennifer Welsh. She is Chief Geoeconomics and Analyst at Bloomberg Economics to talk a little bit more about what you would look for in any kind of potential peace negotiations or settlement talks here, because we had some over the weekend and they didn't go well. And now the reporting is that perhaps the two sides will come together and give diplomacy another try. How do you think through what could actually be durable?
Well, I have areas of optimism and pessimism. On the optimistic side, I think it is very likely that the two parties will come back together for talks. We don't know exactly when that would happen. We don't know even where they would happen. But it does seem that both sides are preserving the option for negotiations, Tehran even taking some steps to avoid escalation in the current blockade. Where I'm pessimistic on is the odds of reaching a lasting and comprehensive deal that really brings normalcy back to the region, and in particular to the Strait of Hormuz. The two sides remain far apart on a number of key elements, including what happens to Hormuz after the war. But it's also important to note that these talks are just the U.S. and Iran. Israel, which is another party to the conflict, does not seem to still be a direct member of the talks, and its conflict in Lebanon is an important area of consideration for Tehran, which wants that to end before it agrees to any lasting ceasefire. So I think markets are betting on a deal that would be full and comprehensive, but that may not be what we get, even if talks were to happen.
And Jen, I guess one of the big sticking issues is the Strait of Hormuz, as you mentioned, and some of the experts we've talked to said, you only secure that thing if Iran agrees to secure it, because that genie's out of the bottle, that genie being, hey, everybody's used the strait for free and unfettered access and trade. That's no longer the case. How do you deal with that?
That's absolutely right, and I think that's one of the challenges the U.S. has faced over the last 7 weeks of this conflict is you cannot really militarily alone reopen the strait. You can do things like escorts, you can do things like the blockade to try and secure it, but there is going to be that perennial threat of Iranian attacks on ships, and that will always have a constraint on how much tankers are willing to take those risks and flow back through the strait. So going into these talks, it seems that the U.S. might be open to some sort of joint tolling venture with Iran that could lead to a reopening of the strait, but that's not a return to the pre-war norm, and I think it still leaves a lot of questions on the table for the global shipping industry and for other oil producers in the region.
And oil importers as well, Jen. I want to get your take on what this means for China, because the president delayed his summit with Xi Jinping of China until May because of the ongoing war in Iran. But now that you have the Strait of Hormuz not being accessible, that kind of throws a monkey wrench in the works there.
Yeah, absolutely. China to date has weathered the war better than a lot of other energy-dependent economies, in part because Iran was still exporting through the strait, even when everybody else wasn't, and China was willing to take those barrels in. If Iranian oil isn't getting out, that's going to be a hit to China's imports at the moment where it's already having to draw on its reserves. Beijing's been careful in the last few days, but it's clear that it's unhappy about the situation. And I think we are very likely to see the longer this blockade lasts, the greater the odds that there will be some sort of decision point where a Chinese-linked ship attempts to challenge the blockade, and the U.S. is going to have to make the decision on whether or not to turn it back. And if it does, there's real cards that Beijing could play here to try and push the United States to allow an exemption, including playing that critical minerals card we saw them play so well last year.
Jennifer Welch, thank you so much. We appreciate that. Jennifer Welch, she's the chief geoeconomics analyst for Bloomberg Economics based in Washington, D.C. You know, you talk to the logistics people, and all they say is, hey, all I know is 7 weeks ago, my ships could go back and forth there, no problem. And that's the way it's been forever. That's not the case. I'm not sure we get back to that point.
Not right now.
That would not be good.
I mean, right now, let's just work on the first thing, which is getting those ships through. Yep. And if they're going to be paying $2 million per ship through Bitcoin or some other cryptocurrency, that might be one way to do it, or paying per barrel of oil.
Yep, we'll have to see how this gets out. Hopefully they can get the two sides back together soon, get those discussions going. S&P up 18, the Dow minus 140, and the NASDAQ up 150 points at 0.7%. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. We've got stocks holding near record highs as traders eye confirmation of new talks between the U.S. and Iran. And, of course, a fresh batch of corporate earnings reports, including strong results this morning from both Bank of America and Morgan Stanley. Taking a look at stocks right now, S&P 500 up about 20 points. The Dow, though, is down 120. And the NASDAQ composite is rallying 151 points. We've got Brent crude basically unchanged at $94.71 the barrel. WTI crude down 0.25% at $91 the barrel, and the Bloomberg Dollar Spot Index little changed at 1193.08. We've got shares of Broadcom rallying today. The chipmaker expanding its partnership with Meta Platforms to provide the Facebook parent with more custom AI chips. We've got shares of Broadcom now up more than 3.5%. Shares of Robinhood racing ahead nearly 8%. That's after the SEC lifted a restriction that required retail investors to have at least $25,000 in their accounts to make more than 4 day trades in a 5-day period. And shares of American Eagle Outfitters up more than 5.5% after announcing actress Sydney Sweeney will return in a new ad campaign after last year's controversial ads featuring her. This new campaign with actress Sydney Sweeney is going to focus on summer apparel and jean shorts. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Scarlett and Paul.
So they're going to continue to press that gene angle then.
You better believe it, because it really did wonders for not only the stock, but for business.
All right. See, advertising works.
There is no bad press, right?
Yeah,
Isn't there
no
a saying
bad
like
press.
that? Yeah.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Banks reporting numbers over the past few days, generally really, really good numbers out of the capital markets businesses, and Morgan Stanley also highlighted their wealth management business shares. Let's break it down a little bit. We can do that with Cheryl Pape, Senior Portfolio Manager at Angel Oak Capital Advisors. She's also a fellow graduate from the Fuqua School of Business at Duke University, so we know she's smart. Cheryl, thanks so much for joining us here. What's your takeaway from some of the big investment banks that have been reporting numbers so far this week?
Yeah, I think it's been an incredibly strong earnings season thus far. I think we're seeing strong results clearly on the capital market side, trading, revenues, equities in particular, fixed income, mostly across the board. I think Goldman was a little soft there. And then I think, credit remains stable. We're getting good disclosure on private credit exposure that seems to be well contained. And net interest income holding the line as well. We're seeing Bank of America increase their guidance for the year there this morning. So really a lot to like across the board.
A lot to like, and a lot of it is driven by the volatility that we've seen across financial markets. It certainly gave a huge boost to trading revenues at almost every single one of these big banks. How durable is this? I mean, we talk about volatility being good for them, at least for the first quarter, but at any point, does this volatility turn into a negative?
Yeah, I think that is the question. Where do we go from here in terms of, market volatility certainly helped on the equity trading volumes this quarter. But I think when we look a little bit deeper, looking at the client relationships that are driving the investment banking fees, the pipelines are strong there. And then I think on the fixed income side, investment grade credit has been strong as well. So certainly benefiting equities. I think the rest of it is probably a little bit more resilient, and we could see maybe softer equities in the coming quarters as things normalize back down if we become a little bit less volatile in terms of the markets.
Cheryl, one of the industries that was thought to be a big beneficiary of a second term for President Trump was the financial services industry through less onerous regulation, maybe even allowing some consolidation to take place. Are we seeing signs of that? Oh, I think she froze. That whole Zoom thing's not working for us right now. That happens.
Technology failing once in a while.
Yeah, exactly. But, we'll have to see how it goes. All right, but looking at the banks here, I mean, I thought the results across the big banks were really, really good. What I'm going to be interested to see, and a lot of that was capital markets driven.
Yes.
The equity income from the desks was just across all the firms, which is amazing. A little bit of volatility in the fixed income side. I'll be interested to see the regional banks who rely less on the capital markets activity and much
and
more
really
on
depends
loan origination, net interest income, those types of things.
Right. And we've heard from the big banks in terms of investment banking fees. They pretty much came in better than expected. A lot of that was because M&A advisory fees rose more than expected, while debt and equity underwriting kind of missed the mark there. So you wonder how that sets us up going forward, how comfortable companies are with moving forward and making deals in this very uncertain environment. Cheryl Pate is back with us. Cheryl, talk a little bit about how you are adjusting your positioning in these banks following this latest set of results.
Yeah, I think, one of the key things that we've been talking about this year is deregulation and excess capital deployment. I think we saw that at Bank of America this morning. It was double the buyback expectations. Morgan Stanley spoke to it benefiting the business in terms of lower capital requirements as well. I think where we can see benefits moving forward in terms of our positioning, we do think there is an M&A play that will be heating up and a lot of opportunities for let's say larger community banks, smaller regional banks to be acquired up as the asset scale moves higher. So that is probably one of the key things that we're looking at, who would be potentially good acquisition targets from the smaller end of the size spectrum.
So to that end, Cheryl, we're going to get, we're pretty much done the big banks here. When we get to the regional banks, what will you be looking for here? Because they'll be, obviously, they have much smaller capital markets businesses.
Yeah, it will depend clearly much more on spread income, loan growth, and holding the line on credit. A couple out this morning, I think, results in line with expectations, not as much the blowout that we've seen because of capital markets on the large banks, and therein may create opportunities to look to build scale and drive growth from an inorganic perspective.
Cheryl, after the banks report earnings, what we usually see is that they start selling debt as well. Are you a buyer of any of these banks' debt?
Yeah, we think there's a lot of opportunity on the bank debt side. The market has been very strong. There really hasn't been an impact from market volatility and the broader macro backdrop. We're seeing still attractive spreads, but near tights in some pockets. So we are buyers here. We have dry powder to deploy, and we think there's good opportunities at the big banks down to the small banks in this kind of market.
Talk to us about private credit. What are the banks saying about their exposure? Is it a systemic problem? What are they saying?
Yeah, I think we got better disclosure this quarter. Clearly, everybody seems to have a new slide in the deck that talks about private credit exposure and within that subset, BDC exposure as well. From my perspective, it looks manageable in terms of size relative to the balance sheet, and also in terms of loan to values and cushion above. So you can see some deterioration in marks. And the banks are in a very strong position, in our view, in terms of where they're positioned. So we don't think this will be a systemic issue. There could be clearly some idiosyncratic issues, but systemically, I think we feel pretty comfortable here.
Cheryl, do you look at the foreign banks? Do you look at European banks? And is there anything to apply from what we learned from the big U.S. banks to banks in Europe?
We tend to focus more on the domestic opportunities, but I do think probably what you will see is some carryover to the large European banks in terms of benefits to the capital market businesses across the board and the investment banking and trading results.
Cheryl, do the regional banks have private credit exposure, or are they not in that business?
Just given the size differential, it tends to be much more of a large bank issue in our perspective. We will look to see if we get further disclosure from some of the bigger regional players, but tends to be a less trafficked area for them relative to the big banks.
All right, Cheryl, thank you so much. Cheryl Pate is Senior Portfolio Manager at Angel Oak Capital Advisors, walking us through how she's thinking through these big bank results. This is always the first wave, and it kind of sets the tone for the rest of earnings season. And once again, the message from corporate America is however much uncertainty there is, they feel that the underlying economy is doing well enough that people are moving forward.
Absolutely. All right, let's switch gears to technology. Always a lot of technology news out there, and it's news with really big numbers too. I mean, and today's no different. Anthropic has received offers from investors for a new round of funding that could value the company at about $800 billion or higher. The numbers keep going.
And this is a private company.
Yes. And if I'm, putting my IPO banker hat back on from back in the day, I'd be knocking on these doors so hard saying, let's rip this thing in the public market, but we'll see. Mandeep Singh joins us, global tech research lead for Bloomberg Intelligence. He's over in London right now, cracking heads over there at Bloomberg Intelligence over there, whipping them into shape, as well as seeing a bunch of clients. I can look at his calendar. I see he's actually doing a lot of real business over there too, so we appreciate that, generating some revenue, hopefully. Mandeep, talk to us about Anthropic here. Any surprise here?
Well, I mean, we knew when they released that 30 billion ARR number that, the growth rate is phenomenal. It's been accelerating, driven by the use of their product as a coding agent. And they seem to have leapfrogged OpenAI and the other frontier LLMs when it comes to coding agents specifically. So right now, everyone is lining up to be part of their next funding round. And since OpenAI was valued at $850 billion, given, Anthropic has surpassed OpenAI's ARR, I'm not surprised that we are talking about $800 billion range for Anthropic in the next funding round.
So the big numbers that Paul was mentioning, where a new funding round that could value it at $800 billion, it sounds like Anthropic doesn't actually need the money right now. So are investors just throwing money at the company and the company is saying, nah, no thanks, we're pretty good. We just raised $30 billion in February.
I would say these companies do need a lot of money simply because, they keep saying they are compute constrained. And look at, what OpenAI has been doing with regards to, all the deals that they have signed to get the compute. Look, in the case of hyperscalers, at least they have the free cash flow to pay for, the CapEx. In the case of Anthropic and OpenAI, they don't have any free cash flow like the hyperscalers, so they actually need the money to pay for all the compute and AI infrastructure. And that's where, it's great that OpenAI was able to raise $120 billion before Anthropic surpassed them in terms of ARR. I bet you they'll have a harder time now than they had a couple of months back. And right now, it's Anthropic's moment. So the more